Crude oil is now trading back above $77 per barrel, over a 700-point move in the last 2 weeks. We have talked you through multiple opportunities on oil throughout the month of January to be building back at the swing lows. Every retest down towards 70, 71 and 72 US dollars per barrel. Currently we have 12 positions on crude oil with our clients at the Gold and Silver Club. Every single one of those positions is in profit. And we've also taken the opportunity over the course of this week to continue to lock in the whole way along here, banking into strength. So far this week, we've banked over 2,500 points on just crude oil. So of course, you know that calculation. For every 1 lot contract you be trading, that's $25,000 of profit. Every 10 lot contract you be trading, that's $250,000 of profit. We also have platinum breaking back towards 920 US dollars per ounce. We took the opportunity on Thursday to sniper in again on platinum at 895 US dollars per ounce. Continue to stack in on every retest back down towards that level. It is just rinse and repeat on this market. As many hedge funds and money managers and retail traders at the start of the year that came in to platinum right at the beginning of 2024, and essentially we've seen many of them get liquidated. And now if you've been patient, you have much better prices to be buying platinum back down at $900 per ounce here after it started the year above $1,000 per ounce. Now, palladium has also presented a massive opportunity, and yet again, a dip back down towards the 930 zone this week. So platinum and palladium, both of these markets are like down towards $900 per ounce. In my mind, very straightforward to capitalize on this pullback that we've seen across both of those precious metals, and essentially continue to stack in at those zones, then take advantage of the impulse moves high that we typically get as we transition over this quarter. Now, alongside that, gold prices, we've seen very much in a tight range over this week. We have seen basically a lot of technical traders out there get massively chopped up on gold since the start of the year. Not only technical traders, but hedge funds and money managers, over 80% shifted to the long side at the start of 2024 when gold was trading back at 2,080 US dollars per ounce. And all it's done since then is range bound to lower. We have capitalized on very quick pullbacks back down towards $2,000 per ounce for these quick breakouts to the upside. But right now, gold does remain range bound. There are better trade opportunities to be had at the moment, particularly banking on strength on oil. We've talked you through multiple opportunities here over January to be capitalizing on oil. Many of you have absolutely crushed it on this market. Silver as well, just at the start of the week, it was at $22 per ounce. It's now trading back at $22.85 per ounce. We took the opportunity again with our clients at the start of the week, as we identified with you on the week ahead commodity report, to sniper in again at the 22 zone. We've seen nice fast profits on silver here as well. Gold, for now, we continue to remain range bound. However, we have 3 catalysts going into next week. Wednesday's FOMC statement, Thursday's Bank of England interest rate decision, and then Friday's non-farm payroll data. These news items, they're going to provide catalyst here when there's large volumes going through the market. Use that as exit liquidity. That's exactly what we did on the European Central Bank across gold, silver, platinum and palladium. Any opportunities here on these major catalysts to bank into strength, lock in further profits, rinse and repeat. And now towards the end of the week, as is very typical, after the European Central Bank announcement, you're getting a nice rotation on gold back down towards 2,000 US dollars per ounce. If we get it next week, I would suggest on gold, any rotations back down towards the swing lows that were tested over December would be nice opportunities to reload and add further exposure. Just be mindful that quite often you can see a post-European Central Bank sell-off, particularly on gold here. So just be mindful of that as we head into next week. Again, you really want to make sure you're just ditching those technical analysis strategies which give you zero edge in these markets right now. As I mentioned before, every single new trader to the market, they are taught technical analysis. If you get no further than technical analysis, unfortunately, you're just going to find yourself just get chopped up all of the time in these markets. It's an extremely basic way of trading. You need to give yourself a lot more edge in these markets. So of course, the hedge funds, money managers, the banks and institutions, again, as I mentioned on Tuesday, everyone knows the setup that technical analysts use for confirmation in the market. So therefore, it's very easy to work out where all of the stop losses reside for those traders, and constantly you'll see them getting chopped up with a run of the stops, only to then see the market slingshot in the original direction intended but without the retail market or the technical traders on board for the massive opportunities, a massive slingshot move, an impulse move higher that you typically get on multiple commodities. So again, this is where you really want to be utilizing data, statistics, market intelligence, use a professional, research-driven approach, learn and understand the capital flows in the market, key areas of liquidity that are targeted so you can get your sniper entries in, and also knowing the right point in the cycle to bank into strength as well, bank at the top of the cycle for your windfall amount of profit. Further compound that as well with the intermarket correlations, the ratios in the market, learn and understand the real-time data-driven cycles, so the daily, weekly, monthly, quarterly, real-time data-driven cycle for each commodity. Further compound that with how the hedge funds, money managers, the banks and the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.